Hey guys, Steve here with the free trade for July 29th, 2014. Hope everybody had a great day. I was kind of out of the office today for most of the time, so apologize for not having a little bit more input on Twitter and stock twits. To be honest, right now is actually one of the few times that I've actually looked at the market today, so it'll be off the cuff, and you'll get my instant analysis as I am reviewing it myself. So it looks like for the S&P 500, we're really coming back, as we said yesterday, into that consolidation area. The fact that we're retouching the trend line and not bouncing off of it kind of tells me that that may lead to lower prices, as I discussed yesterday. I still think we come back into this 1940 and maybe even consolidate for a couple more weeks. I read a couple interesting articles yesterday about how August is one of the worst months in history. So, we could be setting up for maybe more of a pullback if we kind of go with seasonality. And but like I said, we're always going to follow the price action. And right now, the fact that we didn't bounce off or follow through on the bounce off the trend line that we had from yesterday and are now revisiting it may lead to some lower prices, and like I said, maybe some more consolidation. On the weekly chart, though, as you can see, nothing really to deter any of the thoughts of being long only. The market really is in a nice weekly uptrend. One thing I am going to do is I'm going to actually do it right now. Let's see. Style. Studies. Add study. We're going to add a simple moving average to the chart here. I'm going to gray it out so it's really not noticeable. But one of the things I do have noticed lately, I used to look at the moving averages pretty much exclusively, and now I kind of look more at trend lines. But one of the things I did notice is, especially it looks like in the Dow. Yeah, the Dow. We had drawn this trend line yesterday, and I had said, we were breaking trend line, but by having that 50-day moving average in there, especially, and what a 50-day moving average is exactly what it says. It's the average price over the last 50 days. I use a simple moving average, so each of the 50 days is equally weighted. They have exponential moving averages, which the more recent prices are weighted a little heavier. I don't really use that. I use just a 50-day moving average. It's the only moving average I want to put on the chart. And basically the reason I'm putting it on is because I looked at this yesterday, and actually we had said, the market bounced back above trendline support. But I also wanted to show you that right here where the trend line, where we had a previous bounce, it was right at the 50-day moving average. Here was the 50-day moving average. Back here was the 50-day moving average. So the 50-day moving average is a very common moving average to use. So I just want to add that to the charts moving forward, just to have it there as just a secondary trend line. Obviously I think we're going to try and use trailing stops that would break our trend lines as well as the 50-day moving average, so at least we can get 2 points of reference to make sure our stops are in the right places. But like I said, the trend line is usually sufficient enough because it usually follows along. Anyway, so back to the NQs. I don't really look too much at the Dow anyway. It's really just because it's only 30 stocks. I'd like to have something that has a little bit more diversity in it. That's why I really like the NQs and the S&P. Anyway, we're moving here. Obviously, this is a much more accelerated trend than the 50-day moving average. So if this trend line broke, that would be sufficient enough to exit a position if we were in it. But we're really just revisiting the top of this box, moving sideways for potentially a little bit of a move higher. One stock that's in the news after hours, before we get to our stock, is Twitter. Twitter is basically trading, I think it's around $50 right now. Let's see. Last I saw, it was 50. Yeah, 49.70, 49.80. So Twitter had earnings after the bell. So if you guys were in Twitter, it wouldn't be on my recommendation because we haven't covered it. But if you are, congratulations. I would definitely take some profits tomorrow morning, and at least take some of those gains and book them. But this really wasn't a setup yet. It could have been. We could have looked at this kind of trend line, maybe a reversal. But, like I said, that's not a setup. It's just something to know about. So congratulations to everyone who had Twitter. Now to our stock, ADM, Archer Daniels Midland. Getting some more selling pressure. As we identified, this can really go away, this trend line at this point. So what I'm looking at now is this potentially could be the top or a short-term top, and we may come down and break this trend line. It really looks like it got extended coming right into the top of the channel, and now it looks like it's rolling over that one gravestone doji. And if you didn't watch the video back on the 24th, I definitely recommend you go back and look at that, because we identified that gravestone doji as a potential reversal signal. And now, if this breaks this 47.32 level, I think that would be a great time to exit our trade and book some small profits that we had and look for another one. But we have earnings coming up on the 4th. So like I said, right now we're still in the trade. This could easily come down to 47.32, bounce higher. Maybe it moves sideways for another couple weeks. But at this point, it does look like the top of the channel is going to provide resistance, as it has, and we're going to roll back over. Not necessarily coming back to the 46 level, but it definitely looks like it does have some lower prices in store. And like I said, we would gladly just step aside and find a new trade, book some small profits that we had. This is about the 3rd week that I've been doing the videos, actually started the 4th week. So if you would be so kind, I'd like to hear back from you. I actually did post a poll on the website, just trying to see what videos everybody's kind of enjoying, which videos maybe you think needs tweaking or can be more helpful. So if you can visit that poll and also maybe leave some comments on there, I'd appreciate it. That's it for today, guys. So if you haven't already, please follow me on StockTwits, Twitter, and Google+, and subscribe to the YouTube channel. And if you like the video, please give it a thumbs up and leave some comments below. Thanks for watching. See you next time.